Let us see our next question. A large profit making company is considering the installation of a machinery to process the waste produced by one of its existing manufacturing process to be converted into a marketable product. At present, the wastage is removed by a contractor for disposal on payment by the company rupees 150 lakhs per annum for the next 4 years. The contract can be terminated upon installation of the aforesaid machinery on payment of compensation of 90 lakhs before processing operation starts. This compensation is not allowed as a deduction for income tax purpose. The machinery required for carrying out the processing will cost 600 lakhs to be financed by a loan repayable in 4 equal installments commencing from end of year 1 onwards. The interest rate is 14% per annum. At the end of the 4th year, the machinery can be sold for 60 lakhs and the cost of dismantling and removal will be 45 lakhs. Means we can get the scrap value of the machinery rupees 60 lakhs. However, whatever the cost that we have to incur to remove the machinery from its present location will cost 45 lakhs. It means that the net amount that we are going to receive is 15 lakhs. Sales and the direct cost of the product emerging from the waste processing for 4 years are estimated as under. So year 1 to year 4 sales information is given, material consumption, wages, other expenses, factory overhead, depreciation as per income tax rules have been given to us. Initial stock of the material required before the commencement of the processing operation is 60 lakhs at the start of year 1. The stock level of the material to be maintained at the end of year 1, 2 and 3 will be 165 lakhs and stock at the end of year 4 will become 0. The storage of material will utilize the space which would otherwise have been rented out for rupees 30 lakhs per annum. Labor costs include wages of 40 workers whose transfer to this process will reduce idle time payment of rupees 45 lakhs in the first year, 30 lakhs in the second year. Factory overhead include apportionment of the general factory overhead except to the extent of insurance charges of 90 lakhs per annum payable on this venture. Income tax rate is 30%. The present value factor for 4 years are as under. Year 1 to year 4 factors have been given. Advise the management of the desirability of installing the machinery for processing the waste. All calculations should form part of your answer. That is what they have provided additional. Everybody is requested to go through the question. Then we will discuss that how to make calculation of answer. Let us have first of all understanding of the question before we proceed for doing answer. So dear students, over here the question is providing the information about the present and a proposal. The question is providing the information like this. Like we may be manufacturing of a product, something like this. And in manufacturing of that is product, there is a certain waste which is generated. Now we are considering say a proposal to convert this wastage say into a marketable product, something like this. So we are considering say further processing of the wastage and it will be converted into a marketable product. So here information is provided something like this. that presently what happens at say, we remove the vestige on making payment of 150 lakhs per annum. This is what say we are doing right now. We are considering say to rent out a certain portion of the premises for 30 lakh rupees per annum. And say there is idle time payment wages of 45 lakhs in year 1 and 30 lakhs in year 2. This is the present situation. As far as the idle time payment of wages is concerned, it means that say we may be having say certain part of the factory premises wherein say a few workers are coming in the morning, they sign the register, they go back in the evening without any work. Still we have to make payment to them for the time for which they attend the factory premises, and that is considered to be the idle time payment. That is provided for the first year and for second year. So there is a proposal so now to convert this vestige into marketable product. Once we say initiate for this, the very first thing that will happen is that say we are required to make the payment of compensation of an amount of rupees 90 lakhs to like the agency or to the company say which is doing right now the work of removing of the vestige. We understand something like this, that basically what must be the case is that when we had to remove the vestige at that point of time, say we might have like asked for the quotation say from the different agencies. Now out of that, say, let us say we have shortlisted say an agency called ABC for the purpose of removal of the vestige. Now we may be having a point with ABC company that say we will give you the work for let us say a certain number of years, and as against that say you give a reasonable quotation to us. We give an assurance of work to you, and against that say you give like reasonable quotation to us. ABC Limited agreed with this. However, ABC Limited kept a condition that whatever the number of years that say you commit to me, that is the number of years for which you have to give work to me. In any case, if at all say you cancel the contract in between, then in that case you are required to make the payment of compensation. The amount of the compensation is an amount of 90 lakhs. That is the way the information is provided to us. So what happens that say we have to pay the compensation only if at all we further process the waste. Otherwise we don't have to pay it. We are required to buy a machinery having a life of 4 years. Its net salvage value is 15 lakhs because 45 lakhs is the cost that say we are going to incur say for removing of that machinery say from its place. We'll receive gross 60 but 45 is the expense. So the net amount that we are going to receive is 15 lakhs. Then there is a new point which is provided over here with respect to the stock. It has been given to us that say we are required to the stock level of the material. Here the information is given. Initial stock of the material required before the commencement of the processing operation is 60 lakhs. That is in the year 0 it is 60 lakhs. The stock level of the material to be maintained at the end of the first year 165 lakhs. At the end of the second year again 165 lakhs. At the end of the third year again 165 lakhs. And at the end of the fourth year it will go down to 0. This is the way we have been provided with the stock, and we know that say in absence of any other information, stock itself will become the working capital. Now from this entire information we are required to take a decision that whether to further process the waste into a marketable product or not, whether we should do this work or not, whether we should convert this wastage into marketable product or not. That decision is required to be taken over here. Let us see that's how we can take the decision. Dear students, over here we will adopt the incremental approach for the purpose of decision making. Let us say that this is A and this is B. So we will take the incremental approach like this, that let us further process a vestige instead of say removing of the vestige, say by making payment of the compensation. In a way that say we are going to adopt a kind of incremental approach as B over A, further processing of the vestige over not further processing of the vestige. That is the way we are going to take a decision over here. So please write down answer. First point, in this question, we have to decide, comma, whether to further process west or not. Full stop. Second point, we will adopt incremental approach for decision making. Full stop. Incremental approach is further process the west over not further processing it. Full stop. Step number 1, investment. I request you to tell me investment. Write answer in your chat box. Let us see that's how to calculate the answer. Let me explain you first of all. Working note number 1, calculation of working capital change on annual basis. So dear students, over here, year 0, year 1, year 2, year 3, year 4. We understand that the working capital investment that we have is like this. Initial stock of the material before the processing operation 60 lakhs. Then later on it is 165 lakhs. 60, 165, 165 and 165. And lastly it is 0. So working capital change. Year 0 there is cash outflow of 16. Then 165 minus 16, there is an additional cash outflow of 105. The second year working capital requirement is 165 and we already have 165. So no investment is to be made. Third year working capital requirement is same as the second year end investment. So again there is no change in the working capital. Last year full working capital will be recovered, that is 165 lakhs. This is the working note number 1, that is working capital change on annual basis. So now we understand like this. Calculation of investment. We understand it is consisting of the compensation to be paid in year 0. The amount of the compensation which is required to be paid is before the processing operation starts. that shows that it is in the year 0. So that is an amount of 90 lakhs plus working capital investment. The amount of the working capital investment is 60 lakhs. So the total amount of the investment is 150 lakhs. Dear students, if at all you want to show the amount of investment as the purchase of the machinery, then of course you can show it. So what happens at say in that case, you have to show the inflow of the loan also. So the amount received in form of loan is inflow and the purchase price of the machinery is outflow. You may show both or you may not show either of them. And that is the way we can compute the investment of year 0. So write down this working note number 1, working capital change and then investment. So this is the investment in year 0. Step number 2, depreciation. I request you to tell me the depreciation of year 1 only for the first year. Friends, as far as depreciation is concerned, we already have been provided with the depreciation information from income tax point of view. You can see depreciation as per income tax rules. So we don't have to make any calculation of the depreciation on our own. First year, second year, third year, fourth year, depreciation is given, that we have to mention as it is. So please write down answer depreciation. First year, second year, third year and fourth year. Depreciation first year 150 lakhs, second year 114 lakhs, third year 84 lakhs and for the last year it is 63 lakhs. Write down depreciation. Step number 3, terminal cash flow. Now before I proceed to compute the terminal cash flow, there are a few questions which I want to ask you. Suppose there is a company called A Limited. We know that say as far as the income tax is concerned, in that say we are having certain the rules and regulations. So I'm discussing one of them with you like this. Now let us say that there is a company called A Limited and A Limited is manufacturing two products, product X and product Y. Suppose on manufacturing of product X, so that is a profit of 3 lakhs, and on manufacturing of product Y, let us say that there is a loss of 1,20,000. My question is that if at all the income tax rate is 40%, then in that case, what must be the tax liability of A Limited? Please write your answer in the chat box. So friends, as per the Income Tax Act, the amount of the income tax liability is found like this. There is a profit of 3 lakhs and there is a loss of 1,20,000. So basically there is a net profit of 1,80,000. In a way that's a technically it is given a name as set off of the losses. So on this 1,80,000 you have to pay tax at the rate of 40%. And the amount of income tax liability would be 72,000. This is what we understand. On 3 lakh rupees at the rate of 40%, you don't have to pay income tax of 1,20,000. You have to make payment of income tax of only 72,000. In a way that's in a technical language, 120 minus 72, you get income tax savings of 48,000 due to the loss. And this is given a technical name as loss tax savings. This is given a technical name as loss tax savings. that is an amount of 48,000, and it is equal to this 1,20,000 into 40%. This is what we understand. This is the kind of income tax provision that say we have. We understand that say basically income tax department will consider this as like an SSE, and SSE may be having say more than one kind of business. So whatever the profit that say you have made, from that say any loss if at all will be set off, and on the net amount only you have to pay tax. Now one more question I'm asking you. Suppose there is a company called B Limited, and it is having, let us say, in the first year of the business, it has a loss of 40,000. No other so the income that it has. In the second year of the business, let us say that there is a profit of 70,000. Let us assume that the income tax rate is 40%. I want you to tell me what must be the income tax liability for the first year and for second year. Friends, over here, if at all you have only one business, and in that business unfortunately you have a loss, then in that case you don't have to pay tax. However, the income tax department will give you say an advantage of carry forward of the losses. So what happens at say the 70,000 minus 40,000? So only on this 30,000 you have to pay tax at the rate of 40%, and that comes to an amount of 12,000. So this is the way you have the tax liability for the first year and second year. So let us start with the step number 3, terminal cash flow. In that, please write an answer along with me. Working note number 1, calculation of capital gain or capital loss on sale of machinery. We understand that so the scrap value of the machinery net of dismantling cost, it is an amount of 15 lakhs less return on value of the machinery. We know that so the initial purchase price is 600 lakhs minus first year depreciation is 150, second year is 114, third year is 84, and fourth year it is 63. 600 minus 150 minus 114 minus 84 minus 63. That comes to 189 lakhs. Sale value of the machinery is less than WDV. So there is a capital loss. So the amount of the capital loss on sale of the machinery is 174 lakhs. This is the first working note. Next, calculation of terminal cash flow. And this amount is going to be received year 4 end. That is consisting of sale value of machinery. It is 60 lakhs minus 15 lakhs. That comes to, 60 lakhs minus 45 lakhs. So the net amount is 15 lakhs. Plus working capital recovery. Dear students, as per the step number 1 that we have done, there will be recovery of working capital 165 lakhs at the end of 4th year. Now importantly, what happens is there is a capital loss. This amount of the loss will be set off against other capital gain, and we will get capital loss tax savings. As far as this question is concerned, in this very good clarification has already been made. It is a large profit making company. It means that say whatever the this capital loss that say we have would definitely be set off against some other capital gain. As per ICAI suggested answer, the kind of assumption that say they make usually is that so the company is a large profit making company and we will get the tax saving on the loss immediately. So 174 lakhs into income tax rate is 30 percentage. So 174 into 0.3, that comes to 52 lakh 20,000. The kind of example which I have given just now to you, in that say you understand something like this. This 70,000 into 0.4, 28,000 is the usual income tax liability that you will have. But because of this 40,000 rupees of the loss, so 40,000 into 0.4, 16,000 is the amount by which your income tax liability reduces. And you get, say, that is your income tax liability reduces to 12,000. So this 16,000 is given a technical name as loss tax savings. The amount of the tax that you are able to save due to the loss. So this time again there is a loss, and for that so you will get the tax saving. So overall terminal cash flow will be 15 plus 165 plus 52.2. So overall it is 232.2. This is the way we are required to make the computation of the answer. Please take down answer. Giving explanation of the loss tax saving once again. See, basically what happens at, going back to the example which I was explaining to you, your income tax liability would have been 1,20,000. So you had to pay 1,20,000 from your pocket. However, we understand that say, due to the loss of this 1,20,000, your income tax liability reduces to rupees 72,000. It reduces by 48,000. So whatever the amount of the cash outflow which was going to take place, that does not take place because of the loss, and it is considered as cash inflow. Friends, always remember that the terminal cash flow will consist of these three items only. One is working capital recovery, second is the scrap value of the machinery, and the third is the capital gain or loss tax effect on the sale of machinery. Chalo, read on with paragraph. Importantly over here, specification is made that it is a large profit making company. Comma, so for loss we have considered tax savings, cash inflow immediately. Full stop. Generally, we make that assumption even otherwise. Full stop. Loss tax savings is indicating amount of tax saved due to loss. Full stop. So friends, as per ICI suggested answer, even if this kind of that is clarification may not have been given, let's say it is a large profit making company, that assumption will be made and accordingly we will calculate the answer. And of course we will put a note on a safer side. Step number 4, calculation of recurring cash flow. Now friends, over here we are going to make the computation of the recurring cash flow from end of year 1 to end of year 4. I want you to make the computation of the recurring cash flow only for the first year. Then I will do second year, and so on. So we will be having the working for the remaining years. So let us start doing answer. We are doing it only for the first year. Please write down answer along with me. Sales, which is given to us in the question, it is 966. Material and so on information have been given. So sales is 966 lakhs. Then direct material consumption is given, that is an amount of 90 lakhs. Then information is given for the direct wages. Then overhead expense, that is other expenses. Then factory overhead is given. Then we have been given depreciation, that is again as per the Income Tax Act. Now as far as the direct wages is concerned, in that say we have been provided with the information like this, that labor costs include wages of XYZ number of workers. How many number of workers, we are not concerned with that. Goods transferred to this process will reduce idle time payment of 45 lakhs in the first year. So we understand that as far as the idle time payment is concerned, it will reduce by 45 lakhs in the first year. In the first year, the total amount of the wages is 225 lakhs. Now basically a few workers who are coming in the morning and they go back in the evening without any work, they will be called upon to work on this project. And because of that, say, this 45 lakh rupees of the idle time payment would be saved. It means that, say, we have only the incremental cost. Because of this is 180 lakhs. Whatever the total number of workers who are working on this project, if at all we consider the salary of or wages of all of them, it is 225 lakhs. However, out of this 225, 45 lakhs is the expense that I was going to incur even otherwise. So we understand that say an expense that I am going to incur even otherwise is not an incremental expenses. So we will consider the direct wages for the first year only 180 lakhs. Next, other expenses, for that so the no information is given. So other expenses as it is 120 lakhs. In respect of factory overhead, the question is providing the information like this. Factory overhead include apportionment of general factory overhead except to the extent of the insurance charges of 30 lakhs. We know that say any allocation, absorption, charge or recovery of overhead does not form part of the decision making. So factory overhead include apportionment. So whatever the expenses which is only apportionment, that is not supposed to be considered in calculation of the cash flows. So whatever the expenses which are out of pocket, only this 90 lakhs will be considered. We understand and say the question is providing the information that factory overhead is 165 lakhs. However, this includes apportionment. So any allocation, absorption, charge or recovery of overhead is indicating that say it is a part of the overall expenses. So that is supposed to be ignored for the purpose of calculation of the incremental cash flow. We will only take into account only the incremental expenses, that is the insurance charges of 90 lakhs. Depreciation, which is already provided to us in the example, 150 lakhs. Then we have been provided with the information that say we are going to raise the debt financing. So we will have the interest payment. We know that say 600 lakhs is the amount of the loan and the rate of interest is 14%. You can see it is 600 lakhs and the rate of interest is 14%. So I think it will be 84 lakhs. Next, we understand that say we will be having the rental income forgone. Rental income forgone. A kind of opportunity cost. We have been provided with the information like this, that the storage of material will utilize the space which would otherwise have been rented out. Means we could have received the rental income, but since we are going to utilize that space for the storage of the raw material, so we are going to lose 30 lakhs. Then savings of waste removal cost. Whatever 150 lakhs that say we were paying otherwise, so that will not be paid. And this 150 lakh rupees will be the savings that we will be able to have. Why? Because say we understand that say we are going to further process the wastage. This is the way we will have so the profit before taxes. Income tax rate is given, so we'll compute the profit after taxes. Depreciation is a non-cash item, so it is added back in order to make the computation of the CFAT. Then we have simple one more adjustment as a working capital investment. We know that say at the end of the first year, we require the working capital of 165 lakhs. We already have invested 60 lakhs. So there is an additional investment of 105 lakhs. So over here, the amount of the working capital investment is 105 lakhs. And the last thing is the principal repayment. It has been provided to us like this, that to be financed by a loan repayable in 4 equal installments commencing from end of year 1. So in 4 installments it is required to be repaid. So 600 lakhs into 1 by 4, that is 150 lakhs. That's it. Based on that, so we'll compute the simple cash flow. It is profit after taxes plus depreciation. The amount of depreciation is 150 lakhs. Minus working capital investment 105, minus principal repayment is 150, and based on that, so we'll compute the cash flow. This is the way the cash flow is supposed to be calculated for the first year. Write an answer for the first year, and for second year, you try to do answer on your own and put your answer in the chat box. So finally, for year 1, it will be like this: 966 minus 90 minus 180 minus 120 minus 90 minus 150 minus 84 minus 30 plus 150. So profit before taxes is 372 lakhs. Income tax rate is 30%, so into 0.7, so it is 260.4 plus 150 minus 105 minus 150 once again. Cash flow is 155.4. This is for the first year. Try to do for second year on your own. Let us see that, say, for second year, sales value is 966 lakhs once again. Direct material consumption is 120 lakhs. Direct wages, it is provided to us as 225. However, again over here, 30 lakhs is the idle time payment. So it is 225 minus 30, that comes to 195. For other expenses, no adjustment is given. So as it is, we will write that is an amount of 135 lakhs. Factory overhead is given 180. However, everything is allocation except for the insurance charges 90 lakhs. Amount of depreciation same 114. Now interest is to be paid on 450 lakhs at the rate of 14%. Why? Because 150 lakhs has already been paid. So the amount of interest is 63 lakhs. Rental income forgone, no change. Savings of waste removal expenses, no change. And based on that, so the EBT will be calculated. 966 minus 120 minus 195 minus 135 minus 90 minus 114 minus 63 minus 30 plus 150. So it is 369 into 0.7, so 258.3 plus depreciation, that is an amount of 114. So that comes to 372.3. No working capital change, because second year in working capital requirement is same as end of year 1. So there is no additional investment to be made. Minus 150. That comes to 222.3. That is the way cash flow for the second year can be calculated. As far as the third year is concerned, we'll have the sales value as 1254, 1254. Direct material consumption is 255. For direct wages, now no adjustment is given, so we have to mention as it is 255. Other expenses, no change, 162. Factory overhead same 90. Depreciation as given to us in the question 84. Amount of interest payment will fall down 300 lakhs into 14%, that is 42 lakhs. Rental income forgone is cash outflow of 30 lakhs. Savings of waste removal expenses same 150 lakhs. And based on that, so the profit will be found. So 1254 minus 255 minus 255 minus 162 minus 90 minus 84 minus 42 minus 30 plus 150. So profit is 486 into 0.7, 340.2. Depreciation same 84. No working capital change. Again 150 would be deducted. So 340.2 plus 84 minus 150. So 274.2. That is the way we are required to make the computation of the cash flow for the third year. Now for fourth year, similar calculation will be made. 1254. Direct wages again 200. So direct material consumption 255. Direct wages is sales is 1254. Direct material consumption is 255. Then direct wages is 300. Then other expenses are 210. Then factory overhead is 90. Depreciation is 63. Payment of the interest will be on 140, that is 50, at the rate of 14%. That comes to 21. Rental income forgone is 30. Savings of the waste removal expenses 150. Okay, so what will happen? 1254 minus 255 minus 300 minus 210 minus 90 minus 63 minus 21 minus 30 plus 150. So for the fourth year, sales is 1254 minus material consumption 255 minus direct wages 300, other expenses 210, factory overhead is 90, depreciation is 63, interest is 21, rental income forgone 30, savings of waste removal expenses 150, PBT 435, PAT 304.5. Add back depreciation minus principal repayment, and this is the way the cash flow is found. Working capital recovery is not mentioned because it has already been considered in step number 3. This is the way the recurring cash flow is calculated from end of year 1 to end of year 4. This is the way the working is done. Now in step number 5, we'll make the calculation of NPV. So step number 5, NPV calculation. I request you to calculate the NPV and post your answer in the chat box. Let us see how to make the NPV calculation. It is first year, second year, third year and fourth year. First year it is 155.4 lakhs. Second year it is 222.3 lakhs. Third year 274.2 lakhs. Fourth year it is 217.5 lakhs plus terminal cash flow. In step number 3 we have found it is 232.2 lakhs. So 217.5 plus 232.2, that is 449.7. Discounting factor at 14%. First year to fourth year 877, 769, 674 and 592. So let us see how to do answer. 155.4 into 0.877. So 136.29. 222.3 into 0.769. So 170.95. 274.2 into 0.674. 184.81. 449.7 into 0.592. So 266.22. This is the present value of the cash inflow. It is near to 758.27. 136.29 plus 170.95 plus 184.81 plus 266.22. Less investment. Amount of the investment to be made in year 0 has been calculated in step number 1. So friends, in step number 1 we have found the amount of investment to be made in year 0 is 150 lakhs. So investment is 150 lakhs and difference of both of them is NPV. That is 608.27 lakhs. And of course we understand that since NPV is positive, the company is advised to further process the vestige. So the final decision would be, as NPV is positive, comma, the company should further process the vestige. This is the decision. Please write down answer. So let us have a small revision of this very simple question. Basically, presently we are having, say, something like called annual expense of 150 lakhs for removal of the vestige, then rental income of 30 lakhs that we can get if at all we rent out the factory premises, that is a certain portion which is going to be used for the raw material storage, and we have the idle time payment of this. Now we are considering, say, to further process the vestige. Because of that we have to pay compensation, we have to buy machinery, we'll have the stock requirement. So we are adopting a kind of incremental approach for decision making. In step number 1, this working load number 1 is important and it is a new working for us. So far we have not come across this kind of working. Investment is in year 0, that is very important. In that, so the compensation and the working capital investment. Regarding loan, cash inflow and outflow both. So we may mention both or we may not mention either of them. Terminal cash flow, again over here this is something important. Why? Because this is for the first time that we have the capital loss on the sale of machinery. So here first of all we have found the capital loss on sale of machinery. We get its tax savings. In addition to that, scrap value of the machinery and working capital recovery. Step number 4, of course it is very important. We have the idle time payments, which is not incremental, so it should be deducted. Factory overhead only to the extent of the insurance charges, because remaining all are apportionment. Interest payment, rental income forgone is outflow. Savings of waste removal cost is inflow. Profit before taxes converted to profit after taxes. Importantly, working capital investment is shown after profit after taxes. Why? Because it is not subject to an item which is, say, subject to income tax. Principal repayment is also shown again after profit after taxes. So the sequence in which you have to write the values are also important apart from the calculation. Step number 5 is simple NPV, and based on that, say, we take decision that the company should further process the waste.